as people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think
Bitcoin, we bought 250 million. No public company had ever bought any. People thought we were crazy. So then we bought another 175 million. People thought we were crazy. Then we bought 600 million more. Give me an example of something you can own $100 million of where you can take personal custody of it and where you can actually move it anywhere on earth. When we bought Bitcoin, we bought 250 million. No public company had ever bought any. People thought we were crazy. So then we bought another 175 million. People thought we were crazy. Then we bought 600 million more. People said, you can't stand on it, it'll destroy you. It's like standing on a bridge made of steel. And I concluded, it's the perfect engineered material to solve our problem, but people are living in fear. And how are we going to get them to not be fearful? And I was reminded of Andrew Carnegie's example. It's like, build the bridge, go stand out in the middle of the bridge. You build an airplane, fly the airplane. Show people that it's not going to break. That's what MicroStrategy did. We said, well, if it's good for 100 million, it's good for $1 billion. If it's good for $1 billion, we might as well go for 4 billion. Right? And at some point, people will realize that they have more to fear by not embracing this technology than by embracing it. Give me an example of something you can own $100 million of where you can take personal custody of it and where you can actually move it anywhere on earth and where even if I hold a gun to your head, I can't take it from you. And the only thing we've ever figured out that you can do that with is Bitcoin. And so Bitcoin is like, it keeps everybody honest. The optionality to do this means that all you got to do is find one bank in Singapore that'll treat you better than the bank in New York or London or Tokyo. And then you can move it in a half an hour for $5. And what happens next? The bank in New York thinks, well, I guess we can't screw these guys over because they'll just move it to Singapore. And the guys in California say, well, I can't just tax all the Bitcoin in California. It'll move to Wyoming. It'll move to Singapore. It'll move to Malta. And at the end of the day, you can tell everybody go fuck themselves. You can put it in your head, memorize the freaking key, right? And it's here. And then, the classic Bitcoiner response is, oh, yeah, my Bitcoin, I lost it in a boating accident. You ever heard that phrase? It's kind of a trope, but what it means is at the end of the day, if you push me too far, I lost it. It's gone. Sorry.
That's it. You're right.
Tax that. If we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. But gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think it crosses $1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's no reason we couldn't go to 10 million a coin, right? Because digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid frequency money. But when I start to program it faster, it starts to look like digital energy, and then it doesn't just replace property. Then you're starting to replace bonds. Right? It's 100 trillion in bonds. There's 50 to 100 trillion in other currency derivatives. And these are all conventional use cases, right? I think that there's 350 trillion to $500 trillion worth of currency derivatives in the world.
Mm-hmm.
And when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, any currency itself, any derivatives to those things, they're all derivatives, and they're all defective. And they're all defective because of this persistent 7 to 14% lapse, which we call inflation.